We've spent several weeks on this channel making predictions, making calls, and putting our money where our mouth is, only to be disappointed by the actual outcomes that were occurring. We stuck to the fundamentals, but for whatever reason, the fundamentals weren't working in our favor. This was an eerily similar period to the January to February period of last year, where I had been talking nearly every day about a possible coronavirus downturn and how the market was not pricing in this factor at all. And then all of a sudden, we saw a force occur. Now, it might not be as extreme of a situation as that, but energy stocks have been hated for a very long time, almost as if they aren't the most important companies in the world and they aren't doing anything to combat the CO2 emissions and a possible future without oil. Because, as we had said months ago, and we'll continue to say whenever necessary, this is not the case, particularly for a company like Exxon, which engages in carbon capture technology that has taken the equivalent of 111 million cars off the road with just $10 billion in developmental investment. So assuming that technology is more developed and cheaper now, we can expect the cost for gain to be less than that. In addition to the Porsche deal, among other things, they've got, big partnership and order already in place, expected to arrive next year, with global clean energy companies, or holdings rather, in order to get renewable diesel biofuel that is also carbon neutral. So the long-term thesis of these energy companies is out the door. It takes 20 years to get your money back from Exxon just on the dividend alone. That is a lot better than other companies. And it is to my assumption that they are going to increase that dividend with time. One of the forces being inflation. Now we're bringing it all the way back to what we were talking about at the beginning of this video. Things happening, fundamentals being the case, but the market not necessarily reflecting that. We've seen inflation. We've seen it in the data. We might experience it at some places. Maybe you've had delays for items. There will be some people who outbid if they could, if the market allowed them to, just because the supply is less. That's just the way economics works. If you look at those X graphs. So there's inflation. There's no disputing that. Yet bond yields are below inflation. That makes no sense. It doesn't make sense. It makes zero sense. In my opinion. Maybe there's some sort of PhD economic explanation. Oh, the risk of having it in the bank. Something like that. Because there's still positive yields technically, but they're so low, below rate of inflation, you might as well buy land or anything or Exxon, whatever. They're below the rate of inflation. So people are giving up purchasing power. We explained this in yesterday's video. Giving up purchasing power to receive less purchasing power in the future. Weird, but that's the way it is. So that's not sustainable. So it looks like bond yields are finally starting to break out here. We'll see if that holds. It should. As we said, bond yields are below the rate of inflation. Yes, there have been negative bond yields in Europe and Japan for some time. Those economies have lagged. Bizarre how that's the case, how they have negative bond yields, but they do. But today, we see bond yields tick up. We see energy do very well. We saw energy recover a lot of the losses from yesterday that were remaining after it recovered a lot of the losses from the morning yesterday. And we've been waiting for this energy move. In addition, we saw a major run out of Mosaic today and yesterday. This, in my opinion, is an inflation stock. So it's possible we're going to start seeing the inflation moves occur. That's what we've been waiting for. This is not a trend that takes a day or a week to play through. In my opinion, and in my assumption, and in my planning, I expect it to take several weeks to several months. And we're getting some data tomorrow. So we'll stay tuned. Things are looking good. Energy, Mosaic, mining companies. I no longer have that much real estate. As I said in a couple of videos ago, have sold a lot of that. In the December videos, which I believe were only on Instagram, but maybe they're on YouTube and LinkedIn, we talked about how our 2021 story stocks were energy, real estate, and mining companies. We are out of real estate, not opposed, but it has seen a nice run. We don't know how interest rates are going to affect it. So we're just taking the gain, moving a little bit more into energy off this massive, unwarranted pullback, and preparing for what happens next. And diversifying into things like Mosaic. Farms are very good things to have during inflationary periods because the demand for farmed goods is very inelastic. You need food regardless of the price. It's a necessary good. Mosaic makes the fertilizer for farmed goods. That will be the case. You need corn. You need corn in this country and in this world. So that's how we're playing the situation. And until next time, peace out.